Faultlines.
You're listening to Faultlines with Thomas and Stranahan, and we are joined by Steve Grumbine, political, economic, and social justice activist and founder of Real Progressives and Real Progress in Action. That's a 501c3 and a 501c4, respectively, both dedicated to education and advocacy for modern monetary theory. Steve, thank you for joining us. How are you doing this morning?
Hey, I'm doing great. Thanks for having me on, guys.
Hey, thank you for being willing to join us. We're going to talk about Bitcoin first. We got other stuff to talk about as well, like the Pecora files, a project you started, Wall Street, and investigations that are long since due into Wall Street. But we'll come back to that first. Bitcoin hit an all-time high in the past couple of days. First, it hit $50,000, then it slumped back down, and now, as of this morning, standing at $51,240. And this is after a couple of months where the value of a Bitcoin has continuously risen. I remember the halcyon days when a Bitcoin was like the fraction of a slice of a pizza or something like that. And then people started to use it, and you'd buy like a pizza with the Bitcoin. So it's, $5, $10, $15, $20, that kind of thing. And over the past half decade or so, it has risen like like nothing else. It's gone up like crazy. And in just the past couple of months, it hit another all-time high, $30,000. That was over the new year, and a peak of $40,000 less than 10 days later on January 9th. That preceded a slump, a short-term slump that ended in late January. Since then, it has come back and back and back. And I remember this coincided with the GameStop speculating frenzy thing that was going on, driven by Redditors over on Wall Street Bets. That seemed to coincide with it hitting the end of its slump and starting to come back up. I'm not sure if there's a causal correlation there, just pointing it out. Anyway, big investors, not least of which I would say be Elon Musk, officially now the richest known man in the world, threw like $1.5 billion into Bitcoin within the past couple of weeks. And then more mainstream types, whether you're a bank or whether you're MasterCard. MasterCard has decided to accept Bitcoin. They've decided to integrate it into their network. And now the Bank of New York Mellon is taking Bitcoin deposits. They're going to be offering Bitcoin storage services. So Bitcoin has gone mainstream. Whether they've sold out or they've gone big, I'm not sure here, but there's definitely getting more official and more official recognition, and that seems to be driving the value of a Bitcoin up. I wanted to bring you in to talk about this, just to give people, a lot of folks already know what cryptocurrencies are, but for those who don't, could you try to give your brief sort of intro explanation? No, you're not, too deep personally into this stuff, but your brief initial explanation for how a Bitcoin differs from regular currency, what your perspective on it is. Is this all just speculation? Is this all just an investor-driven frenzy? Or is there some long-term sustainable, stable value there that this is creating? Is this just another poppy mania, or is this something more than that? What's your take on it, Steve, and what is it, after all?
So, bottom line is that all the cryptocurrencies out there are still commodities. They're still very unstable, no matter how exciting you get. They're still very unstable. And the other thing is that they have a specific quality about them that renders them not really a currency. Okay, and that, number one, it can't be used to pay taxes. And when in states, I think there's a place in Florida that started opening up the floodgates for people to pay and various crypto, and there's stuff in Ohio that allows people to pay in crypto. But what it does is they say, hey, Mr. Government, here's my $50 worth of Bitcoin, and they give them that. The government then in turn takes that $50 of Bitcoin, cashes it out for U.S. dollars, and then takes it back. And so really at the end of the day, Bitcoin and all these other commodities, these cryptocurrencies are really commodities. They're really speculative tools. We do have, I won't mention which coin, but we do have one coin that we receive some money from, if you will, some value from, for one of the channels that we operate on. And one day I was like, oh my goodness, what the $4,000 worth of said coin? And I was like, we should invest that in Dogecoin or whatever. We started getting really excited. And then we went the next day and it had dropped over $1,000 worth of said coin. So everything is valued in US dollars. So everything's valued in some other, proper, national currency. And ultimately, it's like an envelope that carries US dollars privately through a system. And at the other end, you open up the envelope and there's US dollars inside. It's not really a currency in the sense of what we think of a currency as. It really is a commodity. You're never going to get a Green New Deal with Bitcoin. I'll put it to you that way.
It's very strange to me because, like you said, the value of it fluctuates so readily. What causes that fluctuation like that? Like, because currencies, if a currency went through that level of hyperinflation, or for that matter, deflation, people would be losing their shirts. People would be outside begging for food and whatnot in a very short order. So why does it do that? Why does Bitcoin do that? I mean, because supposedly I thought Bitcoin was based basically on the number of those things that were mined. And so it's like, if indeed there's supposed to be this kind of stable backing to it, why does the value fluctuate so readily?
Well, because you got old-time investors cashing in on new-time investors. It's the Ponzi scheme. It really is. There's a finite amount of Bitcoin that can be mined. The old-timers get to cash out, and that is what they're doing. They're, quote-unquote, cashing out, or they're moving on to a different coin. And if you think about it, it's not much different than buying 500 shares of AT&T and then saying, hey, I want a different risk position. I have a little bit more appetite for taking some bold gambles. So I'm going to go ahead and take my $10,000 of US dollars, and I'm going to turn that into $10,000 worth of Bitcoin and hope that it goes up. Some old-time investors licking their chops as you go and buy that, and then they go ahead and max out, and then they cash out. So this is kind of the cycle where old-timers cash out, make their money, and let the newcomers come in and take on that risk. So it really is an investment tool. People that think of it as like, hey, this is a currency, I think that's a lot of poppycock, to be honest with you. See that? You like that word poppycock? That way you don't have to censure me.
So right. I was thinking that. I was like, good fix. Good fix.
So that's it in a nutshell. Really, I have no problem. If I was in a position where I could invest money and I was looking to have a very, very safe investment, I'm going immediately to U.S. federal Treasury bonds. There's the safest bet in the world.
So why take the bet of Bitcoin? That's the thing that I never understood. It's like people created an entirely new currency.
It's the risk to return, right? It's the risk to return. I think, yeah. I mean, with like he's talking about with bonds, it's extremely safe, but the value is extremely low. I forget where it is, but it might even be lower than inflation or something like that. But regardless, it's relatively close. So on the other hand, you have something like Bitcoin, for instance. Correct me if I'm wrong, Steve, where you can throw money into it. It can go to nothing very quickly. Or it could be driven again, like we've seen. If you'd invested $1,000 when Bitcoin was worth pennies back in the day, I'm not going to do the math because I can't do it that quick. But it'd be worth who knows how much money now, millions easily. Yeah, Steve.
I mean,
what's your take?
Paper millionaires came about. I don't know if you remember the .com bubble. They had lots of that kind of stuff going on, and people would drive up the cost of dogwalking.org or something like that, or make me a paper mache balloon.com. People would invest it. They never have a single customer, but daggone it, they become millionaires overnight. Some vulture capitalists would come in, buy up the company, tear it up, sell it off in parts, and the cycle would continue. Well, with Bitcoin, what's happening is you see people jumping in, saying, "Man, this one," like the other day, the Dogecoin. And I hope I'm saying that correctly. I'm probably butchering it. But I had every Tom, Dick, and Harry tell me, "Oh, you got to invest in Dogecoin. You got to invest in Dogecoin. It's gone up $1 bazillion, because of the GameStop stuff." And so, from that angle, I mean, hey, if you're trying to have an investment portfolio, I mean, there's money to be made here if that's what you're doing. But there is an incredible amount of risk because it isn't stable. And really it is gambling on like a football game. It's largely the same thing. That's the difference. A U.S. dollar, you're not waking up wondering if the U.S. dollar rose 50%. You're waking up the next day knowing you got to pay your mortgage, and the mortgage is at $1,500 U.S. dollars. And that's that. And if your dollar, suddenly you woke up the next morning and your dollar went from being worth $1 down to worth 5 cents, you wouldn't be too happy. Well, with Bitcoin and stuff like that, you almost expect it. So it's just this is why it's impossible to consider Bitcoin a currency. And I think the debate is over. I think there's some, people still wearing members only jackets out there trying to tell you about this stuff being a currency, but the average person knows it's an investment tool. And for those people out there trying to mask transactions, they know exactly why they bought it. They bought it for the ability to conduct operations without eyes on it. It just really comes down to what you're trying to do. And I don't think I've heard anyone out there really, really believe that Bitcoin was equivalent to $1. They want to believe certain things, but people that know just go, okay, cool story, bro.
I hear what you're saying, Steve. We've got to go into a break. And by the way, for those, thank you for joining us, Steve. We'll be back with you in just a minute. For those listening, we're not giving investment advice. Very clearly, we don't know what the value of this stuff is, any of that. We're just trying to talk about the fundamentals of how it works and why we've seen this crazy investment frenzy in it. But I want to come back on this actually. We should get into the Pecora files as well. But we've seen that over years of its growth. And it's one of those weird, if it's a Ponzi scheme, it's an extremely open Ponzi scheme because people have been calling it that for years now. And yet, despite resurgences, it has continued to reach highs. And I think that has to do with the fact that it's based on the blockchain, which it is in some ways its own topic, although it's wetted at the waist to cryptocurrencies and to the idea of a cryptocurrency. But some people will pose, and I want to talk about this on the other side of the break, some people pose the idea that the blockchain is a sort of deeper revolutionary concept. I want to hear your take on that, Steve. You're listening to Faultlines with Thomas and Stranahan. We will be back in a moment on the other side of this break.
Faultlines.
So Sean, what do you want to talk about today?
Well, Bob, that's easy. I want to talk about the need to stop the development of self-driving cars.
Again, Sean, you're driving me nuts. I think the self-driving car thing's already out of the gate.
No, it's never too late. See, now the leading experts in the field, just pick one, whichever one, leading experts have repeatedly warned us about the dangers of artificial intelligence. Look, I'm telling you, man, we have to stop the robots by any means necessary.
I see what you did there.
Yep.
Tune into our show By Any Means Necessary daily from 2 to 4 p.m. Eastern Time on Radio Sputnik. And don't forget to call in at 3:20 p.m. to our studio number 202-521-1320.
And if you miss us live, check us out on SputnikNews.com, Spreaker, iTunes, iHeartRadio, Spotify, or wherever you listen to podcasts to stay up to date on the latest political, social, and economic movements shaping the world around us.
Faultlines.
And we are back. You're listening to Faultlines with Thomas and Stranahan, and we continue to be joined by Steve Grumbine, political, economic, and social justice activist and founder of Real Progressives and Real Progress in Action. Those are a 501c3 and a 501c4 respectively, both dedicated to education and advocacy for modern monetary theory. And by the way, you can and you should follow Steve on Twitter at SDGrumbine and at Real Progress US. Also check out realprogressives.org. When we closed out, I brought up the idea of the blockchain, which, as far as I know, we actually hadn't even talked about in the last segment. Of course, we're talking about cryptocurrencies, but again, very deeply tied to that idea is this idea of a blockchain, which many people have posed as a sort of more independent foundation for providing various services digitally, for building apps online. The way that a blockchain works is it varies. I'll put it like that. It varies between different services, but generally, as far as I can tell, most of the time it is tied to the creation of cryptocurrencies, where whether it's proof of work or proof of stake, there are various systems for sort of creating each link in the chain. But basically, in a lot of the versions, as you create a cryptocurrency, it creates a sort of new ledger, a new addition to that blockchain, and you can use that sort of sequence of that series of transactions, that series of creations to record certain things, and therefore, again, in a super broad sense, it may be inaccurately in some ways, what you get is a series of records that you can build applications on. You can link the foundations through the use of some of these cryptocurrencies, through the use of some of these blockchains specifically, like Ethereum, for instance. Ethereum, one of the major cryptocurrencies, build themselves early on as creating an alternative for the foundations of building apps, where you're literally building your app in a language represented by the blockchain on the blockchain. Anyway, a lot of people have proposed this, especially in light of censorship and what many see, including us, as the increasing suppression of free speech, as a way to build out an alternative internet that is connected to the one that we all use, but that has different and arguably safer foundations. Coming back to the idea of a Ponzi scheme, Steve, Ponzi schemes also, I'll note this, often have some other ideological component. And in the case of a cryptocurrency, if it is a Ponzi scheme, I would say that the blockchain provides that ideological component. But I want to get your take. Is the blockchain genuinely revolutionary as it's being used in some cases? What's your take on that, Steve?
See, I think the blockchain technology is absolutely fantastic. I see, as a project program process engineer kind of guy, I see blockchain as a technology, a tool, a solution to potentially many problems, including voting. I see blockchain operational in banking in general. Like, I could see switching from US dollar cash into a form of blockchain, and I'll just throw this at you. This is a discussion that maybe some have never considered, but creating quote-unquote dollars with timers on them, basically. If you don't use it, you lose it, and it dies after a certain period of time. That would prevent pooling of extreme wealth at the top. So there's a lot of great opportunity there to fundamentally change how wealth is accumulated and so forth by moving regular standard currency to a blockchain ledger. That doesn't mean you speculate on it. We're not talking about blockchain as the currency. We're talking about blockchain, the technology, you see? And I think the fundamental difference between the two tends to be that, people view the Bitcoin and stuff like that as through a different lens. But you could use the exact same. In fact, there are central banks that are out there in the process of trying to understand how to create that state-based currency through the blockchain itself, and how they would manage that. One of the great leading voices in that is a guy named Rohan. Another guy that you might want to check out is a really, really phenomenal guy named Brett Scott, UK guy. There's many more, but those two in particular really, really stand out as thought leaders in the space.
Steve, the putting a timer on the cash is an interesting concept. This goes to the whole idea of the speed of money. Like, how fast does money get into the economy? How fast does it move? How fast do people get rid of it? And I think you're trying to make the point of trying to get an incentive to invest that cash as opposed to save that cash. I don't think, how does that ever get over the finish line? I mean, because basically the situation exists now. Meaning, if they put out taxes, that's some of a way to try to pull money back from the wealth of the uber wealthy. And we can't even get that done. Like, we can't even get the basics of tax policy done. That seems almost like an impossibility of getting them to put a quota on their cash, as opposed to these guys going and, having multiple lifetimes of wealth. I mean, I understand the logic of it, but it also seems impossible. There's talk across the whole terrain, people from different ideological perspectives that are looking at the extreme inequality in the world, not just in the U.S. I mean, this is a global phenomenon. I mean, I'm sure you've seen the images of the champagne glass. You've got that big, huge, wide glass copper with a No, I agree with you. I guess I don't see the wealth of this world, seeing that as an issue. That's my only point. Like, it's like, I think it's more like Hunger Games. I think it's like they would go to a buffet, they would eat as much as they can, they would take a pill to throw up, and they would eat more, despite the fact that you have starving people in the other districts. That's what I think we are. That's where I think we're at. And I think
I don't disagree with you, brother.
Yeah, but the thing is, I don't think the wealth of the nation sees that as a problem.
See, I'm not sure that it's just wealth, right? I mean, people, you got to understand that people are still innovating. People are still trying to solve problems, whether they're wealthy or they're not wealthy. The question is, can those people that come up with these ideas, be it rich or poor, actually make them stick? And you're right. I mean, everything's an uphill battle. I'm not even sure how I feel about that timer being placed. You know what I mean? There's just a lot of interesting ideas out there that are being considered and looked at, and it's just worthwhile to look into. I think there's some.
Well, if you don't agree with the timer, what would you agree with? Like, what would you think of as a solution?
I mean, it's just
maybe solution is too strong, but a way to combat it.
Yeah, it's as good a solution as any as I've heard. I'm saying I just don't know how I feel about it, right? Again, there's implications. I mean, on the surface level, it's like, yeah, and you start picking at that, and you start saying, oh, I see this potential problem. Like, you know, I mean, little people saving money, right? You know, how does that work out? And, you know, I could see somebody with extreme wealth. I mean, but how does you know, coin A know that coin B has been around, or does it matter? Is it an independent thought? Where's that, you know, decision making done? I mean, there's just a lot of questions, and there are probably answers out there that I just don't know. I'm just not well versed enough in it. But it definitely addresses some of the more major concerns. But you realize this also: most of the oligarchy and the wealthy people of the world. When I say wealthy, I'm not talking about people that earn, you know, a living. I'm talking about wealthy people that have passed on billions generation to generation. I have the, you know, gilded walls and stuff like that. These people don't really worry about the regular economy. These people have wealth that exceeds the economy in terms of, you know, so I'm not sure that they're the ones that maybe they have some sort of, you know, a noble cause. Maybe they suddenly find a way that this works for them. I don't know. I really don't have the inner, you know, the inner insights these people have. But I know from a perspective of extreme pooled wealth, this is definitely the best solution I've heard. There may be more, but I thought it was a valid concept.
All right. We've only got a couple of minutes left. We've only got about 2 minutes here. I want to take the time to get out your new podcast, your new venture, The New Untouchables, and the Pecora Files. Can you tell us where people can find this, what you're doing over there, and just a little bit about, we've only got maybe a minute at this point, a little bit about Ferdinand Pecora and why you think he's important to understand now in 2021. Steve.
Absolutely. So you can find the new Pecora. It's called the New Untouchables, the Pecora Files, and it's a podcast with people such as the legendary Bill Black, my co-hosts Patrick Lovell and Eric Vaughn, and you know, these whistleblowers during the the great financial crisis, the people that witnessed the countrywide mortgages and the Robert Rubin's recycling through government. And why does it matter today? It matters more today than ever as we watch the way the handling of the CARES Act and these other investments that are going on within Wall Street and shadow banking, and we're watching the Fed backstop all that while the people still don't have survival check. So yeah, it's very important now, and we would love to see those people go to jail. And so we would love to see a Ferdinand Pecora style hero come up and really, really take it to Wall Street in the form of a hearing and really bring the bad guys down. And that's what Ferdinand Pecora did. He was a Republican, ironically, the FDR had brought in to basically take on Wall Street. And the guy didn't understand finance, but he understood fraud, elite fraud at that, and he was able to bring the bad guys down. So it'd be great.
And I agree. We need something like that now. And again, folks, if you want to check out the New Untouchables, go over to realprogressives.org. Check out that new podcast. Steve, thank you so much for joining us. For those listening, that was the voice of Steve Grumbine, political, economic, and social justice activist and founder of Real Progressives and Real Progress in Action. And you're listening to Faultlines.
Faultlines.